Welcome to the Friday Senior Solutions Agency call. I'm Joe Johnson, your host, with Jimmy Hernandez, your co-host.
Hello, everybody.
And as we had mentioned, this is the continuation call. Last week we did a call. It was entitled Make Final Expense Great Again. And it was a great call. If you missed it, make sure you go back and rewatch it on our YouTube channel. And this is going to be a continuation where last week was more, talking, stories and success stories and what other people have done. Today, we're going to get more into the nuts and bolts of it, if you will. More, I guess, more of the mechanics than anything else. So again, today is Make Final Expense Great Again, part 2. If you're watching this if you're not live, if you're watching this on YouTube, this is the Senior Solutions Agency. If you need to reach me directly, that's that number down there. That's my cell phone number. If you are not subscribed, I encourage you to subscribe. I appreciate the I think it's close to 1,500 subscribers. And, when we started this YouTube channel in its infancy, 6 years ago, maybe, I don't even know. The intentions really weren't to get subscribers or, a bunch of views or stuff like that. The intention of the YouTube channel was really just to have a place like a warehouse, if you will, a library of videos that are basically archived on the web that our agents could have access to. And it's really taken off. So I appreciate everybody, the 1,500 subscribers that watch our video. Appreciate that. And hopefully you appreciate the content, and we're going to work really hard to keep giving you great content week after week. Today is June the 18th. This weekend, this Sunday, is Father's Day. So, Jimmy, happy Father's Day to you.
Oh, thank you. Happy Father's Day, Joe.
Thank you, brother. And, to all the fathers out there that are alive, and maybe some of the dads that are no longer with us that are having heavenly Father's Day today, man, we appreciate our fathers. They probably don't get as much credit. Let's face it, though, the moms really do all the work, but we got to appreciate the dads in there too. The other thing I just want to point out too, with today's date, it's June the 18th. June is about halfway gone, which means by, in 2 weeks, the year will be half over. Okay. The great thing is that the year's half over. It's only half over. Okay. So that's a positive thing, man. There is 6 months to turn this thing around, and we are just getting so much traction right now. I mean, the coronavirus is dying down. Agents are back in the field. We got more and more agents going on weekly orders for direct mail leads. And I'm just really encouraged that this next 6 months between now and 2022 is really going to take off. And we're really seeing some great growth, and we're going to see, I think, just an explosion of growth and agents getting back out there and writing business. So we appreciate everybody that's on the team and all the work that you do. And I try to make myself as accessible as possible. So, if you need to reach me, please don't hesitate for anything. One real quick announcement: if you have not been to the Senior Solutions website, been a long time since I've done anything with it. And the reason why is because behind the scenes, I've been in the process of updating it, giving it kind of a facelift. It's the same website, so I encourage you, go check it out. Give me some feedback. We got the new version live, but we're I got it up to the point where I'm comfortable with it being live, but we are continually, I'm working with the developers to make changes, and anything you guys would like to see on the website, let me know. So again, it's just, I put it up here at seniorsolutionsagents.com. Like I said, it's the same webpage that we've always had. It just looks a little bit different. You'll see up at the top, I'm going to get a, give me 1 second. I'm going to get a highlighter.
Sharp, Joe.
Yeah, it's a lot. It's really user friendly. This part up here is actually a ticker. So when you log in, you see all the different carriers as like the ticker symbol on the NASDAQ or something. They just kind of rotate. If you click right here on new agents, as an example, you're going to get a drop down. This is great for especially if you're recruiting somebody, if you hire a new agent, man, you can just send them to the website, say, hey man, click on new agent, and it'll walk them through. It's got the new agent orientation. And these are basically in order, the emails that I used to send out to agents. Now it's just on the website. So they can watch the new agent orientation. It's got welcome to the team, which it's got a bunch of videos. It's got the magic formula included in there. It's got information on the new agent starter kit. It's got all the printable forms for the sales folders. It's got the carrier supplies. It lists all of our carriers with the phone numbers and what you should order. And then lastly, on this page, it talks about lead generation and has the different vendors and the contact numbers for the vendors. And then if you click on agent resources, it'll list out, there's a tab with product training, sales training. The sales training has probably 20 or 30 different selected videos off of our YouTube channel that we put up there. And then it's got all the scripts that we use. It's got the direct mail, A lead script, B lead scripts, in-home presentation scripts. And then sales forms would include things like the old, if you're still using the manual cheat sheet as an example. It's got the activity tracker on there. Just go check it out. But just as an example, every time you click on, like if I were to click on product training, it would open up a new page. And then if I click on Mutual of Omaha as an example, it's going to take me to the Mutual of Omaha page, and it's got training videos and it's got sample applications and just various things. So it's up and running and good enough to make public, but just keep in mind, man, we're going to be continuously making additions to it and changes to it. So go check it out. So Jimmy, let's did I start the video?
Yeah, we're able to see your screen if that's what you're asking.
No, I couldn't remember if I started the recording.
Oh, you started the recording. You said you did.
Okay, all right, very good. All right, I got a little bit nervous there for a second. All right, guys, so we're gonna get right into the nuts and bolts, talking about making final expense great again, and we're gonna get into the profitability, what your costs are, and then we're even gonna get into, later in the call, Jimmy's gonna do a quick segment on really tax strategies, and as sole proprietors, as independent contractors, all the tax advantages that we have when we do our taxes. So you want to make sure you get a good tax person, a good CPA. Don't go to H&R Block. Get somebody that knows really what they're doing. So Jimmy, real quick, I want to talk about direct mail leads. I've got a few more success stories on direct mail. Like I said, we got more and more agents getting back on recurring orders and doing one-time drops. Guys, I've been really impressed with our new lead vendors. About a month ago, we rolled out a new lead vendor that does direct mail leads where you don't have to pay for your leads until they come in. I did my test drop. I got a bunch of leads. I'm making sales off of them. I started a recurring order. Those should be coming in about a week or two. This is a sample of the lead. And I tell you what, Jimmy, I've worked probably close to 15 of these leads so far. I swear, not one person has asked me for a Walmart gift card.
Nice.
Not one person. Okay, now if they do, that's great. I mean, I'm more than happy to mail them a Walmart gift card. I'm just telling you, these people they're not filling, I guess the point I'm trying to make is that they're not filling the card out to get a free Walmart gift card. Don't be scared of that. I'm actually when I go and meet with them in the home, I'm actually handing them the card, just like I would on any other lead. Hey, verify your information. You had filled this out. Talks about the state regulated programs to cover final expenses, Mr. and Mrs. Smith. I'm assuming that when you filled this out, your main concern was you just want to make sure is that when you do pass away, you're not leaving your family with a financial burden. Is that correct? Yeah, that's why we filled this out. Okay, great. I just go right into my process and it has, I swear it has not come up once. I'm sure it will, it's not a big deal, but it hasn't come up. So if you're looking for a vendor that will do direct mail where you don't have to put any money up front, zero cost up front, this is your vendor. The other thing I just want to mention, I mentioned this last week, which I love about this vendor, which I was a little bit confused on. I assume that when your leads come in, because they have your credit card on file, is that they automatically bang your credit card as soon as the leads come in. So if 10 leads come in one day, your credit card's going to get hit for $300. Doesn't work that way. What happens is that when your leads come in, they go into they have a separate CRM. You get an email that lets you know that you have leads. You go into your account and then you manually select how many leads you want to purchase that are in your account, and you only pay for what you select. So hypothetically, let's say they had a great return and like 20 leads come in, but you're like, man, I don't want to pay for all 20 leads. You could just go in and purchase like 5 leads. And then the other 15 leads will sit into your bank. You can go work those 5 leads, make some sales, get some money deposited in your bank account, and go back in and purchase more leads. To me, I think that's like, it's just so refreshing. It's so if you want more information, contact me directly. I'll put you in touch with the vendor. We'll get your account set up for you, and we'll get going. But I can tell you personally, I'm not speaking hypothetically. I'm working these leads myself, and I've been very impressed with them. So let's get into what we wanted to talk about, and that is we just want to lay out exactly working final expense, just exactly how profitable it can be and why we think that final expense is one of the best markets you could possibly get into. One is the cost of entry. This is one of the cheapest businesses that you can start up. There's very little overhead. All you got to do is get a license, pay a couple $100 maybe for supplies. You need your ID badge and business cards and all that stuff. Leads, you're going to need leads. Now we got a new vendor where you don't have to spend $3,000 out of pocket before you start making money. You can have those leads come in and start working them. But what I'm going to do is I'm just going to figure initially when I go over the profitability is I'm going to figure an average lead cost of $32. Okay, the leads that I showed you before, those are $30 a piece. It's a fixed lead cost, $30. I'm figuring 32, just maybe anticipating some inflation. Maybe the lead cost goes up, or maybe you're ordering leads from Need a Lead, which is one of our other vendors. And on average, I would say the average lead cost with Need a Lead is roughly, if you're doing the fixed lead cost, is roughly about $32. Okay, YIG's 27, or no, I'm sorry, 29.75. So I think 32 is a pretty good number. So if you're getting 20 leads a week, what that means is that your weekly lead investment is going to be $640. That's what you need to invest. That's what you would be investing on just 20 leads a week. On those 20 leads a week, we predict that you, on a direct mail lead, that you should be able to get in front of at least 60% of those people, which means you're going to make about 12 presentations. Now, your mileage may vary. Maybe you only get in front of 50%. Maybe you get in front of 60%. I just know historically that most agents are able to get in front of and at least make some form of presentation about 60% of the time. Now, this is on direct mail. If you're working Facebook leads or internet leads, I think you'd really struggle to get 60%. You may be closer to 40%. Just the conversion ratio on other leads is not nearly as good as direct mail. That's why direct mail is still the gold standard of final expense leads. Always has been, always will be for the foreseeable future. So we're going to be making 12 presentations. On those 12 presentations, we figure you should be able to sell minimum half. Actually, let me take that back because we're being really conservative. We're not saying you're going to sell 50% of your presentations. We're going to say you're going to have a 50% application conversion ratio, which is different. Okay, and you to expand on that is that a lot of the presentations that you make are going to lead into multiple sales. I would say at least 25 to 30% of your presentations are going to be dual. You're going to have husband and wife, or that presentation may lead you to a neighbor, or it may lead you to a live-in relative. There's been many times I go in, there's only one name on the card, and I end up making 3, 4, 5 sales sometimes because of just people that are living there, or referrals, or neighbors, or whatever. So we're just saying if you can just get a 50% application, not close ratio, application. So I just wanted to make sure you understand the difference there. $650 average annualized premium, which is what? 650 divided by 12. So we're estimating that the average consumer is going to have a policy that costs about $54 a month. I think that's totally reasonable, okay? You may be in an area that's poor. Maybe yours are only 600. Maybe you're in an area where incomes were higher. Maybe your average is closer to 700. But nationally and through our agency, the average is about 650, what we call annualized premium. In other words, what the consumer's paying on an annual basis. So per week, if you write 6 applications, that means you're submitting $3,900 in annualized premium. Jimmy, are you with me so far? Is this pretty clear?
It's pretty clear, Joe.
All right, I'm just, anytime like you need to add or make a correction, let me know. I just want to go through these numbers. So if we wrote 3,900, chances are, historically, not all 6 applications are going to go through, okay? Usually, most agents can have about a 90% placement ratio. If you're using all the tools, if you're using FEX Toolkit, if you're doing the proper field underwriting, this will help improve and get you close to that 90. 90% is about what we're looking for. Through no fault of your own, you're going to have clients that are going to get declined because undisclosed information on their MIB, or maybe they get cold feet. 1 out of 10 are just they're just not going to go through. And there's nothing, it's not something that you can improve upon. It's just the nature of the beast. So we got to figure a 90% placement ratio. So of that 3,900 that we submitted, we're going to figure 3,510 is what we call net issue paid. That's how much you're going to get paid on. So let's take our 3,500. Most of the carriers, except for a few and like Guaranteed Issue, which pays as earned, but for the most part, most of the carriers you're going to be working with are going to be advancing you 75% advanced commission. So in other words, if you wrote $1,000 AP, 75% of that would be 7,500. That's what your commission is going to be based on. So let's take our 3510 of net issue paid. We're going to get a 75% advance. So that means at the end of the week, if we wrote 6 apps, we should be getting paid on $2,632 of commissionable premium. Now we just got to take that number and we have to multiply that by whatever our commission rate is, okay? Now, I'm going to use a number of 85% net commission rate, okay? Now, some of you may be at 85, some may be at 100, some agents might be at 120%. But the reason why 85% is a really good number is because you have to kind of like dollar cost average what your commission rate's going to be. So not every policy is going to pay out. Let's say you're at 100% or 110% commission rate. If you write 10 policy as an example, not all 10 of those policies necessarily are going to be at the top commission rate. You may have some that are guaranteed issue. You may have some that are a graded policy that pay 20 or 30% less than what the regular level policies pay. So I think 85% is a good kind of conservative number to figure, that's a good number. So let's take our 2,632 of commissionable premium times a net commission rate of 85%. That means we should see about $2,200 deposited into our bank account. And if you annualize that, if you take 2,200 times 12, it's a little bit over 100,000 a year, okay? Which ain't bad on 20 leads a week. I think it works out to be about $107,000 gross commission. In other words, that's what we're going to get when we get our 1099s. That's what our 1099 is going to be, is 107,000 based on this scenario. Jimmy, before I move into like weekly cost and really figure out what how much we're netting, is there anything you want to add or expand on or talk about before I get to the next slide?
Well, so this 2237, that's a week figure, correct?
Yeah, that's in the bank per week.
Per week. So let's say you take 2 weeks vacation. Well, there's 52 weeks in the year. Let's just multiply that times 50. That comes out to 111,850, just to make that clear for everybody.
111,000?
Yeah.
You know what? That's not shabby.
That's pretty decent. And you're being very conservative.
I think I'm being super conservative, because here's what I can tell you is that when I first got started and I was working 20 leads a week, I was close to 200,000. So anyway, this is like super conservative.
Yep.
All right, you want me to move on?
Go ahead, sir.
Okay. So what are we working with? We're getting $2,200 deposited into our bank, but obviously we have expenses. So I'm going to subtract out our expenses. Our first notable expense is lead expense. This is based on 20 leads a week at $32 a lead, $640 in lead expense per week. That's what our cost of doing business. The other thing is, I'm assuming that you're a field agent and you're putting gas in your car. Gas is anywhere between $3 and $3.60 a gallon, depending on where you live and whether you can put, regular, or maybe you got a nice car and you got to put premium. Maybe your gas is $4 a gallon. I don't know. But I just kind of figured an average that if you owned a vehicle, and I think my math was that if you got roughly about 18 miles to the gallon, which is probably about average, and you drove 500 miles a week, that your gas bill would be about $83 a week. Okay, chances are it's not going to be that much. Maybe it's only 50, maybe it's 100, maybe you're driving a pickup truck, whatever it is. But I think $83 a week is a pretty good allowance for gasoline. The other thing, I'm just doing miscellaneous expenses, 50 bucks a week and just miscellaneous BS that you got to do. Maybe it's putting your folders together. Maybe you got to buy a couple of Walmart gift cards, but I mean, 50 bucks a week is maybe you got to buy some paper for your office or whatever. If you take 50 bucks a week, well, let's just say 50. That's 20. That's giving you $2,500 a year allowance for just miscellaneous supplies. I think that's more. I think that's more than enough. So your total expense per week is $773 per week. All we're going to do is take our net. This is what we got deposited. We're going to take out our expenses, and that's going to give us a net profit of $1,400 a week, $1,464. Let's just do the same math. Jimmy, if you got a calculator, what's 1,464 times 50, let's say?
$73,200.
$73,000 a year net profit. I'm just telling you, man, there ain't a lot of jobs out there paying $70,000 to $100,000 a year. And if you're looking at this and saying, well, gosh, Joe, I need to make more than 70 grand a year. Okay, well, there's two things you can do. One is get more leads or get more efficient. Okay, that's really the only two ways you can increase your income. You just need to see more people. And when we talk about 20 leads a week, honestly, I wish I had time to go into different scenarios, but 20 leads a week is really like the bare minimum. We're talking about like starter package here. Eventually, if you're a full-time final expense agent, you should really get your leads up to 25 to 30 leads a week. And you're going to see your income bump from $70,000 net to probably close to $150,000 net after expenses. So as far as, profitability and expenses, Jimmy, this is all I have until we get into, talking about tax structure and how you can really, as an independent contractor, maximize your situation so you get to keep as much as your profit as possible and get some of that money back so you're not paying as much in federal income tax. So anything you want to add before we get into the tax preparation scenarios that you're going to cover?
Yeah, Joe, I mean, I really like this chalkboard too. So what I wanted to say here is you mentioned something about being more efficient, right?
Yeah.
And there's really like two ways you can take that. One, you can like be more efficient on cost, right? So like maybe you use a lead program such as SNL, where they're gonna subsidize or give you lead credit. So now you're reducing your lead cost, but you could also be more efficient by closing more people. And so here's something that's rather unique. If you up your lead order, and maybe budget doesn't allow you to take 25 to 30 fresh A leads, but maybe you supplement the 20 fresh leads with some B leads or some older age leads, right? And the cost on those are maybe $2 a lead, right? But now you're giving yourself more opportunity. But here's what nobody talks about. I call it accelerated learning. Okay, when you're starting to run 25 or 30 leads a week, and you do that, let's just say you do that for 90 days, you get accelerated learning, Joe. You're going to learn how to prospect better. You're going to be more efficient. You're going to be more effective. you're going to do better presentations, you're going to close a higher percentage. So not only does it help you just because you're in front of more people, but it helps your learning curve. You know, it shortens that learning curve, and now you're closing more people and you're seeing more people, and your income just takes off. You know, like just skyrockets, like an exponential kind of on a graph, right? It just shoots straight up. So that's something that a lot of people miss, and that's kind of hard to put on paper, but you just got to take my word for it. I call it accelerated learning. You ain't going to get accelerated learning on 10 leads a week. I'm just going to let you know that, right? The other thing too, Joe, this is first year commissions, right? And you didn't even add on the back end, the 20% that the 25% that you get at the end of the year.
I know.
And you're not talking about referrals, and you're not even talking about renewal money. So like,
Right.
let's just assume, let's just say stay super conservative, and let's say the 25% on the back end you don't get because you lost some policies throughout the year. So that's your
Sure.
built-in,
That's reasonable.
that's your built-in attrition, right? So you lost some deals on the back end. This number is still solid, right? And then next year on these, you know, policies that stuck, this was how many policies was this a week? I don't remember.
6 a week.
6 a week. Okay, so these 6 policies a week, the annualized amount that stuck was what? Like 3,900 minus 10%.
$3,500.
So 3,500 a week
Let's just verify.
times 30.
Yeah,
3,500
net issue pay.
So we'll just go with 3,500, and let's say you're at a 3%, and we'll be conservative on that, right? Because there's a lot of carriers that give you a 5% renewal, but let's just say you're at a 3% renewal. That means next year you still write this same amount of business. You didn't get efficient. You're still writing the same, you know, amount every week, but now you're going to add an extra $105 a week in renewal commissions towards your income. So next year times 50, that's another $5,200 a year in renewal income.
Right.
And then the third year, you're getting renewals for 2 years worth of income. Do you see how that just kind of just keeps building up? So that's a beautiful thing. So anyway, Joe, back to you.
All right, buddy. The only thing I'm going to add, and you mentioned about it, I mean, I don't want to get too far in the weeds, but you talk about doing business with SNL, which is Security National Life. Just check this out. If you're writing, let's just say you give SNL hypothetically half of your business. So you're writing 3,500 a week in business times 0.5. Let's say 1,700 of that is going to Security National. That means you're building up your bank of 10%. That's $175 a week. So you're going to be, so that's actually going to reduce your lead cost $175 a week. And then what's one? I just want to do the math. 175 times 50. I mean, you just added an extra $8,700, $8,750 to your bottom line by using SNL. Or in other words, you could reduce, if you're spending 640 minus 7, you could reduce your lead costs down to $465 a week just by giving SNL half your business. So I'm just saying, it's certainly a carrier to look at.
Or you can still buy the same 20 leads and use that extra lead credit to get those additional leads and get your accelerated learning. And now you're really cooking with gas.
Yeah, Absolutely, dude. All right. So, Jimmy, are you ready?
I'm ready.
All right. I'm going to go to the first screen and I'm going to just kind of let you explain the scenario, but I have the control so I can put the cursor wherever you need me to.
Okay. Can you bump that a little higher, Joe? That, I mean, like the magnify it by any chance?
Yeah, what part here?
Like just the whole screen or, oh, you can do a section. Well,
Yeah,
let's, there we go. So you can see right there, this is a tax worksheet. If you made 107,000 in gross income, right, and you didn't write any of your taxes off, FedEx just dropped off a package. If you didn't write off any of your expenses, right, and if you scroll over to the right, and let's say you're married, um, there we go. This is going to show you how much money you're going to owe in taxes. So we're going to take the 107 from your business income.
yeah,
Um, and then if you go down to the next one under deductions, you're able to take a self-employment tax deduction of 8186.
yeah, which is right here, guys.
And then that lowers your adjusted gross income to 98,000. And then if you're married, you can take the standard deduction of 24,800. And then there's this thing called qualified business income. That's what QBI stands for. You can get another $16,000 of deduction there. Total deductions 40,850. Taxable income is now 57,965. Your federal taxes is 6561. And then you have to pay self-employment tax. That's what gets most people. Go down there. That's 16 grand in self-employment taxes. That puts your total tax at 22,932. That's a hefty amount. Now, here's what most people tell me, Joe, is they say, Jimmy, um, the thing is, the reason why I didn't take the deduction on my expenses is because I get the $24,800 for being married, and I don't think that my deductions are going to exceed that. So I'm just going to take the standard deduction. Well, that kind of sounds right, but it's way wrong, right? Because the business income is separate from the standard deduction. So you have to calculate your expenses, and it's only the net income that goes into your income column on your tax return. All right. So those expenses are not deductions, they're expenses. It's a different item, right?
So in this scenario, Jimmy, if I made 107,000 in 1099 income with just my standard deductions, my taxable income, I'm getting taxed on 57,000, correct?
I'm sorry, say that again.
Based on this scenario, I made 107,000,
Okay.
and then when I just take the standard deductions, including the QBI,
Yes,
my taxable income is 57,965.
that's correct.
That number right there. Okay, that's what I want. That's my base. Okay, 965. Okay, that's scenario one. What's scenario two?
Okay, let's look at it, Joe. So scenario two, we're going to actually take in consideration our business expenses,
Okay,
right? So
let me magnify this. Okay, how's that?
there you go. Oh, much better, Joe. Okay. So let's say you spend $100 a month on your cell phone bill. That's a $1,200 annual expense.
All right.
You can use your home office. Now there's some, qualifying, factors, but let's just assume you qualify. We're going to be reasonable at $200 a month. So that's $2,400 a year.
Got
Uh,
it.
you have office supplies, right? So, that's paper, ink, pens, paper clips, all that stuff. Mileage. This is only 15,000 a year. If you're really doing this full time, you probably will have more like 25,000 miles, but we're just trying to be conservative. You're able to deduct, I believe it's 56 cents a mile. So that's how we came up with the $8,400 expense. And then the SEP. So if you want to start a retirement plan, you can contribute, towards your SEP. And the guidelines on that is you can contribute up to 25% of your net profit. So we're just going to be reasonable, just say $2,500.
Yeah.
And then education, that's like your continuing education. You have to buy these different courses, licensing, stuff like that. And then there's your lead cost. So there's the that obviously is enough to go over the 24,000, right? But regardless, you're going to take any cost for your leads, and then we add that up. So their total expenses are 49,280. Taking that off the 107, that puts your net income at 57,720. So let's take that over to the right, Joe.
Okay. Okay, so here in column 1, this is the original scenario, not taking any business deductions.
That's correct.
Okay. Now we're going to be looking at this column right here, the second column.
That's correct.
Okay.
And so now you have 57,000 in income because that was after all your expenses.
Oh my God.
Right. So now because your expenses or your income is lower, your deduction for self-employment is lower. So that's 4416.
Yeah.
And then your adjusted gross income is now 53,304. You still take the 24.8. Your QBI is lower because you have a lower, profit.
So you still, Jimmy, what you're saying is if you're a business owner, now, in order to do this, do you have to be incorporated, or can anybody, let's say I'm just let's just say I'm, an agent and I'm working I don't have an LLC. I'm just a 1099 contractor. Does these still apply to me?
Yeah, that's exactly what we're showing you, Joe.
Okay,
so we're
perfect.
A 1099 sole proprietor with no formal business entity.
No formal business entity. Okay.
Okay. So this is done on a Schedule C. Both of these are Schedule Cs. Okay.
Okay.
And then, so that puts your taxable income. Now we're at 13,875.
Oh my God.
Right. So that takes your federal taxes down to 1388.
Okay.
But you still got to pay self-employment tax. So we cut that down to 8831. So man, we already made a huge improvement, right? We're down to 10,219 total taxes. So we cut your taxes in half because you're, listing all your business expenses as you should, right? But I just want to show people that they are scared to list it. They don't know how or whatever, but you list your expenses, look how much you reduce your taxes by. So now we're going to go into scenario number 3, Joe.
Jimmy, can I just say something real quick?
Sure.
So guys, I hope you're catching this, man. When it comes to taxes, don't be cheap. Like, hire somebody, even if it costs you $3,000 or whatever, you better hire somebody that knows what the hell they're doing, because you can save a ton of money. Get yourself either a CPA or a professional tax preparer that specializes with self-employed people, because somebody that just does regular tax returns may not be aware of all the deductions that you can take. So let's go into, all right, so
let me add on that real quick, Joe, because I'm going to say probably 90 to 95% of the people that are preparing tax returns they're order takers, they're data entry. You're supplying them the information, they're plugging in the computer, and it spits out the result, right? They're not giving you any advice. They're not giving you tax strategies, right? That's what
Right.
I'm giving you here today is tax strategies. And so you need to find, really and truly, you need to find not only a CPA, but you need to find a CPA that does tax strategies. And there's not a whole lot of them out there. Most CPAs just enter the information. Most CPAs are more focused on compliance than advising their customers as to the proper strategy or proper business structure or business entity that they should have. So we're going to go into the next one right here.
Okay.
We're going to talk about having the proper business entity. So for our profession, this is probably, I'm going to say probably 90%, maybe higher, the right entity to have, which is going to be an S corporation. Okay.
So I'm gonna circle that right there. And then we've got all three scenarios lined up. We've got column 1 is self-employed, no deductions. Column 2, just to recap, is self-employed with no formal entity set up. And then this next one is an LLC with the, how'd you say that? S Corp election?
That's correct. S election. That's the technical way of saying it is a limited liability company with an S election, which is on tax returns. That's a form 1120S,
Okay.
which means that it tells the IRS on taxes, you're going to treat me like an S corporation, but technically it's an LLC. So that's what you want. LLC with S election.
Okay.
Okay. So Joe, we're going to take that same 57,000. If we can go to the left though, let's go to the left.
Like you want more over here?
Yes,
Okay.
more. So we can see the print on the left.
Oh, okay. Got it.
Right there. That's good. Okay. So when you have an LLC and you have an S election, you need to go on payroll. And the IRS says that you need to pay yourself a reasonable salary. Now, we've tested this for many years and at the CPA firm. And I got to tell you that what is accepted most of the time is between 20 to 30% of your net income. So we're just going to go on the high side and we're going to say 30%, right? So that in this scenario is 18,000. So Joe, you can show payroll there is 18,000.
Yeah, so right here, guys, it says payroll, which was not on the other scenarios. This is where you're paying yourself on payroll $18,000 a year.
That is correct.
Okay.
So that is a business expense. So you can see now the net income is 39,720. So now let's slide over to the right, Joe.
Okay. Got it.
Okay, so on top, that 18,000 that you paid yourself in salary, that comes in on a W-2, and then your net business income is 39,720, which a total income of 57,720. It's the same as, you know, the column to the left, right? Same income.
Yeah. Same.
Right?
Okay.
Now you're no longer considered self-employed, so you lose that deduction in the second column underneath.
So right here, there's no deduction now for self-employed.
That's correct.
Okay.
Let's go down. So our adjusted gross income is slightly higher, right? And then you're going to take the same, you know, standard deduction for, you know, being married, and your QBI is a little bit lower. And now your total deductions is 30,758, and your taxable income is actually a little higher. It's 26,962.
Okay.
And so it may not make sense, but it will in a second. So
Okay.
now your federal taxes, Joe, are 2840. Okay.
Okay.
Now that you're on payroll, you're having to pay those Social Security and FICA taxes. So that's 2754, but
Okay.
you no longer have to pay self-employment tax. That's where the savings comes in.
Wow.
So now, Joe, your total taxes are down to $55.94. Okay. And assuming that we're withholding a 10% of your salary, that means that the federal income tax, they're going to withhold $1,800 as a prepayment throughout the year. At the end of the year, you're only going to owe $37.94. That's a lot better than that $10,000. But the savings really going up to total taxes is about $5,000, just shy of $5,000 savings,
Wow.
just by having the right business entity. Okay. Now, here's the thing that most people say, well, Jimmy, I don't know if it's worth all of that. What does it cost to, make an LLC?
Yeah.
That's a lot of hassle. I got to put myself on payroll. I mean, how am I going to do that? I got to do my books. They start giving me all the reasons why it's not worth it. So I'm going to show you how easy it is here in a second to do all of those things. But let's do the math. I'm going to pull my phone out and grab the
I'm
calculator.
just saying, dude, here, listen, Jimmy, would you rather pay 22,000 in taxes, 10,000, or 5,500?
5,500, Joe.
I like the 5,500 number.
So that's a savings of $4,625. Okay.
The crazy thing is, dude, with proper tax structure and advice, you made 107,000, but you're only paying 5,500 in taxes.
Thank you.
That's crazy. That's crazy talk, man.
Yep.
Unbelievable.
And if you take the savings of $4,600, Joe,
Yep.
and you did that for 10 years, that's $46,000 that you're saving. What are you going to do with that 46,000? Man, you can invest that into some real estate, maybe buy a rental property,
Yeah.
maybe buy some more leads, maybe invest it in a 401k or a SEP. Like, you got money now to invest for your retirement. And it makes no sense to me not to do this, right? So there is a magic number, Joe. So I want to say that if your net profit is not exceeding 15,000, then just stay in column number 2. Just be a sole proprietor, file your tax return on a Schedule C. But if you're making 15,000 net or more, then it's worth it to create the LLC, to go on payroll, and then you're going to save on taxes. And really, this is just the beginning of tax strategies. Once you have the LLC in with the S election, now we can build on that each year with some strategies. So I want to show the next slide, the schedule. I don't want to show the other two. I want to show that one right there. Okay, I want to show you what not to do. Is Jaime on the call?
Do you want me to blow up the top?
Yeah.
Give me a second, I'll tell you. Yeah, he's on.
Okay, so Jaime, pay attention.
Is this for him?
This slide's for you, buddy.
All right, hang on. All right, Jimmy. So you want me to?
That's good right there. I can see the numbers.
Well, do you want me to magnify the top right now?
Go ahead, magnify that.
Okay.
Okay. Don't do a C corporation. Okay. So when you in a C corporation, there's a fixed percentage of taxes, and it's 21% of the net profit. So if your net was 57,720, you're going to pay 21% straight up. That's 8658. That's that number there on the right.
Oh, right here. Okay.
Then to get the money out of the C corporation, you're going to have to take that out in the form of a dividend. And that's taxed at 15%. That's another 12,000. Okay, so when you have a C corporation, they call this double taxation. So slide down, Joe. That's a total of what on taxes? 20,779.
Oh, right here. Yeah, right here. Okay.
That's the wrong business entity because you're paying double taxation. So you don't want to do a C corporation. It's not too late. you can change it. You can file a form 2553, and that'll change your C into an S, and you'll be good. Okay, there's no way around this, guys. The thing about C corporations is that those are designed for, like, you have a lot of business owners, and each owner is going to own a share. It's not really designed for like a family, like husband and wife, or maybe your kids, because the business has to pay its tax, the C corporation, separate, and then to get the money out, you either have to take that money out in the form of a salary, or you have to take it out in the form of a dividend, and the dividend's going to be straight up 15%. Going back to the S election, I didn't cover this earlier, and I just want to back up. So some people might say, well, Jimmy, I'm only paying myself $18,000. How do I get the other $39,000 out of the company? It's called an owner's draw. So you can just take the money straight out of your bank account, just like you do now. It's not considered an expense. It's just considered an owner's draw, or owner taking capital out of the company. Just like when you invest and you put money into the company, you're just taking it out now. So it's not taxable. The only thing that's taxable is the business profit and the wages, right? So we just showed you what that was. And so your total on the S would be 5594 a year. So that's really what I wanted to show you, of having the right business entity.
Yeah.
So let's talk about those other things. We talk about payroll. So is that what the next slide is?
Yes.
Okay. So these are two payroll companies that I recommend. I personally use ADP. I pay about $50 a month for my payroll. Guys, that's nothing. $50, they do all the work. So they process the payroll, they calculate all the taxes, they do the withholdings. I get my W-2. They file all the,
$600 a year.
yeah, it's cheap.
That's crazy.
One of my clients says, Jimmy, he bragged, well, I only paid $40 with CertaPay, and he's been with them for 2 years.
Wow.
I'm like, oh my God. So, I mean, there's another one. I had never heard of CertaPay, but I looked them up. They look legit. So there you go, ADP and CertaPay. Those are some really good companies.
And this is when you get your, again, this is to confirm when you set up your LLC with the S Corp. Am I saying that right? S Corp?
Yes, sir.
Selection. Okay. All right. Perfect.
So you set it up, you do the payroll, they handle all it for you. So like, okay, this is the next solution, bookkeeping. You got to keep your books straight, right? So once you set up the S Corp, or the formal business entity, you need to open up a business bank account, right? So you need to have that separate and keep it separate from your personal income. So all your commissions are going to go into your business. QuickBooks, I think I pay like $19.99 a month, Joe, for QuickBooks. It's pretty cheap. I have the online version.
I use it too.
What it does, guys, is you link it to your bank account, to your business account. It automatically imports all the transactions. It throws them into two categories, basically your income and your expenses, right? And then you can go through it however often you want, and like, just make sure everything looks right. And you can run P&Ls, profit and loss statements, all that stuff. It's like super simple. So there's your built-in bookkeeper. All you got to do at the end of the year when it comes tax time is print your profit and loss statement, take that to your CPA, and you're good to go. And then this is another solution. Are we running short on time, Joe? Oh yeah. Okay.
No, let's cover this and we'll be done.
Okay. So guys, I really like this program with Vanguard. I did a lot of research on this, and they really have the best program. So if you want to save money and you're a business, right? It doesn't matter if you're the LLC or you're operating as a sole proprietor, you're considered an individual, and you can set up a free account at Vanguard, and it's called an individual 401k, right? And for individuals, business owners, you're able to contribute up to 25% of your net income for, or a total of 58,000 a year. That would be the absolute max. If you're over 50, it'd be 64,500, right? But like for most people, it's going to be 25% of their net profit. The business takes a deduction. So it's a business deduction, and it goes into an account at Vanguard. You're able to pick and select your options, what you want to invest in. Then you as an employee, you can contribute up to 19,500 a year into a Roth, which is a tax-free strategy, right? So I really think that that's cool. So whenever your business makes a contribution, that's going to be tax deferred, which is going to lower your overall taxes for the next year. But on the tax-free bucket, you have the Roth. So you don't get any tax breaks on that today. Your tax breaks come later, because the beautiful thing about a Roth is the growth becomes 100% tax-free. So if you let's say over a 20-year period, as an example, maybe you invested I don't know, 100,000, but the account grew to 100 and let's say 200,000. Let's just say it was double. Well, then you can take that out at retirement age, 100% tax free. You already paid your taxes on the 100, and then you get the growth tax free. So all your withdrawals or distributions are 100% tax free as long as you wait to age 59 and a half. If you have to take out money before 59 and a half, you can always take out up to what you contributed free, right? So if you put 100,000 in, you need to take 20 out. Well, then you don't pay taxes because you put 100 in that's already been taxed. But when you dip into the growth, you only have to pay a 10% penalty, which is the lowest tax bracket on the IRS chart anyway. So that's a really good deal. You have over 100 mutual funds to choose from. Many of those are index funds with no minimum investment, no transaction fees, no commissions.
Wow.
It's an amazing program, Joe. And so I just wanted to throw that out there. I think everybody that's working with Senior Solutions deserves to know all the options that you have to make yourself, better financially, accumulate wealth over time. So, Joe,
Guys,
did you have any questions?
what's that?
Did you have any questions?
No, I mean, this is, a lot of information, man. But at the end of the day, we just got to tell you, if you're self-employed, you're a 1099 individual contractor, and we always talk about run your business like a business. Man, run your business like a business, because you could be costing yourself $20,000 a year in taxes. So it's worth it to get yourself a professional that knows what the hell they're doing, and I just implore everybody to take advantage of all the things that are available for self-employed people. And I just feel like the majority of us are not taking full advantage of everything that we could be doing to not only, limit our tax liability, but really to set ourselves up for the future with great retirement planning at the same time. This has been a great call, Jimmy. Thank you so much. And if agents do have questions, they could maybe reach out to you if they want to pick your brain on something.
Sure. And I forgot to say this, and I'll just say it real quick. Like when you're forming that business entity, you're creating that LLC, you can go online and do this, and the cost varies by state. I can tell you, I'm in Texas. It costs $350 to create one in Texas.
Okay.
But I do recommend going to an attorney, even myself, knowing all of this stuff and knowing how to do it. I went to an attorney. I had my business done, created at an attorney's office, and it was a total cost of $1,500. What I got extra at the attorney was make sure that I had the right, everything was proper on the documents, but also got an operating agreement, and you get some other cool stuff like a seal and a real nice binder and all that stuff. But to me, it's worth paying a little bit extra knowing that it's done correct.
Right.
But if you have a limited budget, you can do it yourself. Just check out what it costs in your state.
All right. Incredible call. Thank you, everybody, for hopping on. I hope this information has been helpful. But the important thing is that to take action. Like, I'm glad you're on the call. If you're watching this as a replay on YouTube, I'm glad you're watching it. But this doesn't do anything for you if you don't take advantage of everything that we're talking about. So take advantage of the situation, and let's go to work, and let's finish off 2021 super strong. All right,
Awesome.
Jimmy, thank you, sir. Thanks for all the information. Have an awesome Father's Day weekend. God bless. We'll talk to everybody later.
Bye-bye.
All right, man. Take care. Bye-bye.